So it's apparent that the 30 minute has its highest up close candle right here. The 15 minute has not made a bearish change in the state of delivery on its time frame, but it's also closed outside of this 30 minute up close candle's body. And the 5 minute appears to have replicated the same thing. However, in this case, price has created an inversion fair value gap here. As well as this pussy over here. If I were to see here from about 7 o'clock, which is Asian session, we made a bearish change in the state of delivery here, traded up higher, created relative equal lows, cleared this minor buy side here, came back lower, and then after price actually made a bullish change in the state of delivery here, it chose to deliver higher. But you can see how had one just been on the 15-minute waiting, you would have probably tried to get long here, which would have failed. And then this breaker here, this play would have helped one at least take longs up into this region here. So this here is a testament as to why it's very important to remain on the 15-minute time frame, because yes, you'll have to wait. Last night you would have had to wait an hour 30 into the session. From the 5-minute perspective, yes, we have an inversion fair value gap here, and we've created an inversion fair value gap, but we only trading hours at 2 to 5. No more, no less. So that's just the present. If we remove all of this and we do our top-down analysis for the day, it's apparent that, so you can see I called out this buy side. So these two highs here. Market cleared the highs, down close candle, fair value gap. Yesterday trades down into it. So the day before yesterday trades down into it, explodes higher. So from the daily perspective now, you do have a high there which has been cleared. And additionally, if you look to this end, this is the next closest up close candle. And you can see we just fell short of it. So that's the daily. In terms of a body, this would have been a very, very lovely place to get long at 7 o'clock yesterday. Very, very neat move higher. So I guess that's what the daily is saying. In terms of the 8-hour time frame, can't say I see anything very, very clear cut in terms of opportunity. I mean, it's already moved since 7 o'clock, it's already moved 21 points. So, yeah, can't really say anything until this 8-hour candle is closed. This is all just one big bullish mitigation block in terms of the 4-hour. There as well, there was this big move from 7 to 11 to 3 o'clock as well. So this here is a possible, so it's an unfurled pussy with short-term low above. So this here could be a potential target or a draw. In terms of the 1 hour, yes, we have this fair value gap. Got an inversion here, and we've got this per se. And also mind you that price hasn't come back to this propulsion block here after this big expansive move higher. And if we're just looking at premium slash discount, I mean, the market does appear to be in a premium, at least on the 1 hour. If we go down to the 30-minute, this is where the talk of this change in the state of delivery was possible, but as you can see, the market did not do so. Even on the 15-minute time frame, there wasn't a change in the state of delivery. That would have had to be a close below these lows. And when I went down into the 5-minute to go and check, we can note this fair value gap here did break structure on the way to the downside. So it is to be noted. IFVG. I'll expect a continual push higher. Just want to look at some ICT video quickly. Let me end the stream. No. I was looking for. I just need to get my times identified clearly. ICT Asian.
Like to look for setups. This is the least active time of the day for me. I live in the North American continent on the East Coast, so whatever time it is in New York time in the States, that's my local time. So what ICT concepts are going to use in this module? Again, the importance of time and price, the Asian open, the Asian session, and important characteristics that make up the Asian session. Okay, first we're going to get into the Asian open. Now, this time of day, you're going to find that the Australian dollar, the New Zealand dollar, Japanese yen pairs are ideal for this time of day. They're active, their markets are open at that time, and it goes without saying that if their markets are trading actively as it relates to their specific currency and country of origin, this small little window of opportunity for North American traders to trade after a 9-to-5 job could fit exactly what you're hoping to do as a part-time gig, if you will, and or your trading model could be completely built around the Asian session and never be up for London or trade in New York session. Now, the Asian Open can sometimes set up an optimal trade entry pattern that can offer 15 to 20 pips for a scalp. Now, the higher time frame bias is helpful here, but short-term retracements in either a bull or bear market can offer similar optimal trade entry setups. As an example here, this is the dollar-yen pair. And again, I'm not trying to zoom in on these charts because the details are not important at this point. I'm just trying to build up an overview of the specifics about the Asian session that are important right now, the salient points, if you will. There's other details and a lot of details that go into this time frame, but you're going to find that if you are looking for trades in this time of day, these pairs, the Aussie, New Zealand dollar, and Japanese yen, tend to do very well. As you can see here in this example to the right, you can see the Asian Open is delineated here. And if you look at Forex LTD, that's the demo account I teach with, if you hit Control Y on a 15-minute time frame, that line is going to be delineating what I refer to as the Asian Open. Now, it'll fluctuate back and forth relative to daylight savings time. But for the most part, I'm looking at a window of about 2 hours. So even though it may not start exactly at 7 o'clock or 8 o'clock in the States in the evening time, relative to the daylight savings time shift that takes place, if that shift is taking place in terms of time, like right now we are in daylight savings time at the time of this recording in December 2017. And when we leave this daylight savings time, it'll shift a little bit. But I use a 2-hour window, so it doesn't have a great impact at all. So what I look for is a move that originates or forms immediately after the Asian Open. Another example here, the New Zealand dollar, again, very similar. This one, you can see the optimal trade entry comes down with just one singular candle on a 15-minute time frame. Comes down, gets an optimal trade entry, runs equal highs in the previous day's range, and ultimately runs all the way up to the previous Friday's high. Now, this is all done during the Asian session, prior to Frankfurt Open or London Open. Now we're talking about the Asian session. Now, the periods when the market is not willing to run in the Asian session, in other words, there's not going to be an optimal trade entry pattern, it will consolidate until midnight New York time. Now, the Asian trading session actually extends beyond the midnight hour of New York time, but I focus specifically in the realm of the Asian Open to midnight. So there's a range of several hours, okay, that I deem as the Asian session for my trading, even though it does trade past midnight New York time. The setup or the information that I glean from these hours prior to midnight are going to be covered in future tutorials and teachings, but there is a limitation because I go into greater detail in mentorship, but you will get a plethora.
Okay, so what I just want to focus on now, it says the periods when the market is not willing to run in the Asian session, it will consolidate until midnight New York time. The Asian session, the Asian trading session actually extends beyond the midnight hour in New York time. The importance of the consolidation holds many clues to how the daily range will develop over the remainder of the 24-hour trading day. These will be covered in future lessons. If I can just say the whole window this year, what I wanted to actually emphasize on here. So we just want to note the 5-minute close, the inversion fair value gap here that has helped keep prices higher. See, this year it wouldn't be an entry model for me, all right? But like this, where prices made an inversion, then it wicks way above this time close candle. In the past has made me now wonder, wouldn't this be a very, very quick trade? Because when it does, it usually wants a form of buy side, say like this for 1.52 hour trade or something. So again, it's not definitive enough for me. Um, but again, sorry, to just get back to that Asian session, what Michael was referring to, if we just go back in time a bit. So it says, what, say, it's 7 o'clock, all right? And it can extend past midnight, all right? Okay, it can continue to go on. But do you see how here, start of Asian, what are we working off of already? All right. Inversion fair value gap over here. A single candle results in an inversion fair value gap and a propulsion block forming. Price trades back down to the quarter level. Remember, if wicks are gaps, technically this here is also a gap here. We go to the quarter level, explode up higher, clearing out the New York PM session highs. So we clear New York PM session highs. We reverse back down, make a propulsion block, close past it. And when we've closed past this propulsion block, what we've also done is we've closed past the consequent encroachment. Additionally, in this entire run up higher, this becomes your bullish mitigation block, the highest up close candle before the retracement, then this run higher. So then this mitigation block here as well, you see how we overcome it with this down pass here, but we don't retrace back up to it. So between consequent encroachment and this propulsion block and the fair value gap made here, you see price run lower now during Asian session. So now your best bet, or at least my best bet now would be, all right, for example, over here, series of up close candles. This becomes in this range, this low, that low. This is a series of highest up close candles. Note how we almost reclaim these over here. But say this candle here at some point would have been a bullish propulsion block. So if we focus solely on the body of this candle here, you see once you close below it, we're rejecting. All right. Then we pull lower all the way during Asian session. Okay. Then by the time we get to London here at 2 a.m., do you see how the price action suddenly it's not as fluid between midnight in Asia and London open at 2 a.m. or the sort of the kill zone. You have all this lovely volume, but you see that towards the end of Asian, you see this wicking past a down close candle or we don't close above it. If we go back here to where I am, at least on the 5 minute, you'll see what I was talking about in terms of wicking past a down close candle without closing above it. Okay. So now one of the big testers in this market now becomes this fair value gap here. You want to see, is the market going to support? Will it keep support here and continue higher? Or will we want to come and dig down here into preloads? Because here you have a pre-market high. Technically you have an Asian high, kind of an Asian low right here. So if we were to go back to that Asian session I was speaking about here, all right, after we get that close, look at this close. When the 15-minute candle closed here, sorry, this was a 15-minute candle closing below a BSI. Right. The next one opens, we push higher. Now you see here we've got an inversion, prop block going higher. Why are we not taking it? Because of the 15-minute sentiment. We've already made a bearish change in state of delivery here on the 5 minute. This move has also offered you a breaker right here. So if Asian session were to be traded on the 21st of December, this would have been the trade. First low, second low, and as cool as you like it, 4.22R. Alright, then you have all this noise, but we ignored it. Then what happens around here? When you had that 15-minute case of it wicked above and then closed below, look again. Trades back right into it perfectly. Here's your long model. And then by the time I actually get to London, look at the price action in London. Yes, you get a bullish change in the state of delivery here. This year also would have offered a very nice 1 to 5. Right? Okay, it was 1.3, but if you were to obviously try and drag this shit out, you could have gotten something better. Alright? But so sorry, ICT also spoke about an optimal trade entry pattern which becomes available during Asian session. If you look at this big run up higher, there was no OTE pattern offered. If you go that high, that high to this low, 50%. If you use the bodies, 61.8 fair value gap. This is a bread and butter setup right here. Target points of the standard deviations here. In terms of this run here higher, 50% pushes up. I mean, I think this year should be just further proof, and I've been seeing it recently, but think of it, it's now American markets are kind of quiet down, it's the holiday season or whatever. I think this is not the best time to just start trading Asian. So like the second I get home, let's see, what is 7 o'clock? New York time to, I'm not in London. So just 2 a.m. Up at 2 a.m., you've got to be willing to stay up until 7 a.m. So 2 to 7, yeah, that would be fucking draining. I mean, you wouldn't have to be up because I mean, once you put in your limit, or once you short this trade right here, at like 3:30 into Asian lows, I mean, you'd be fine. Because like London with VIX, I mean, it seems to work fine. Like, yes, there is movement, but in terms of desirable movement in that regard, I can't say it's there. See, now we are entering a macro, and we will soon now have an inversion fair value gap or a bearish PPO after breaking structure within the macro if we close below it. Just need to wait and see. Okay, and there we go. Bearish PPO has been made. 1 hour propulsion, 1 minute PB here, and this would be your 1 minute shorts here if you were to get in. If you wanted to get in here with your stops. But I actually do want to do a bit of more because I was thinking, right, with the whole funded accounts. Oh shit. Just batteries. I was thinking about it. And with the whole funded account stuff, I can't really just note this inversion here. I can't trade synthetics. I mean, I'd need to. I wonder if. Let me see. Just want to Google something. Can I trade? Yeah, so FTMO does let you trade crypto, so it's good. This is at 5 minutes inversion fair value gap. But do you see how like this entire move is only 2 points? But if one was onto 1 minute time frame, this is your 1.5% down on your funded, just like this. Noting the inversion, then you have this inversion, combine that with the propulsion block, combine that with the macro. But remember, low resistance liquidity runs have fair value gaps being made and they are at times left open. I don't see any fair value gaps being made here and left open. So practicing caution would be wise. It's gonna go lower. I mean, how many times have you seen price form a low like this in up close candle, and then this low is just gonna run way up higher? At least this one would at least clear this low first, or this one before. Remember, risk is 1.14 when this target gets to 2.4, or 2.2, 2.3. You see there, that's 2R done. And I would want this low because short-term low did not trade to the consequent encouragement in terms of this 1 hour perceived move lower. So then after this audacious price run at 2 a.m. now, what I would actually want is the buy side here. Surely these highs would not stay intact. I don't believe it. Right? And that's already 3R down. A reaction is expected after these lows get taken here. But ideally you obviously just wanted to run way lower into this low. This is said reaction. You see how easy 4.67% could be. Just note the propulsion block here and this consequent encouragement reaction. deliver down into the blood clot cell side. Now cometh the hour here we could we could even see market pull way back up here before retracing. Mind you, at this point stop loss is at break even. And these exact lows forming here are actually quite encouraging. It could do this, I wouldn't want it. But it's one like you wouldn't, it would be the dumbest choice to add here because I've done it before and then claim that you know it's just gonna smash your target. Oof. Come on. Get into Southside, cheeky boy. So we'll call it a 5 minute bearish BPR. Ah, where's my pen? Come on. Come on. Come on. Bosh. Just like that. Is it completely random? Nope. So this is now the 30th of the 12th. 5M bearish BPR. Post liquidity sweep. One hour short term low. So to reiterate this trade here and watch closely. First 5 minute inversion fair value gap is here. Price makes this busy with the volume imbalance on the 1 minute. We clear see break structure here. Right. As soon as the macro opens, propulsion block, trade up into it, sell off. Right, in terms of this live stream, you see what I was talking about. Now you get that nice pullback. That's what I'd be targeting now if I was a market maker. So I'll just check this every 15 minutes. Look, I mean, the 5 minute made an inversion fair value gap. Well, one, two, but we're trading into 15 minutes to be. And if we look at the 15 minutes to be high, which is, we can just make this one big one here. You know, like we closed above it, yes, but now we need to make a bullish propulsion block. If we are, sorry, if we are to continue higher into here, because in terms of repricing to a discount, I feel like the market has done that, right? It did that with this move lower, right? So, I mean, look, if these highs do stay intact, then so be it. Um, but, I, but I really can't see them staying intact, especially after this very strong price run up higher. So, ideally, the macro should offer a nice buy program up into, well, this will be the pre-market here. So now, especially entering the 1 minute now, the next 90 seconds or so, if I got a bullish, say from this low, the highest up close candle, let's always be extra sure is these are the exact same high. So if the market were to close above this this price point in with a bullish stance and say by closing past this high, it would have consequently made a bullish change in state of delivery here. Uh, I'd want to see it deliver higher than this. I believe would be a very favorable position, but I'll take off 80%. But I think once you get to this point here, no, it's too late. So that would be the ideal trade. So now we just got to be patient and also just note how the next 5 minute candle closes. Because then in this case, because mind you, I saw this inversion fair value gap plus the propulsion block here, into which I said I'm fine with ignoring the shorts because we didn't break any sort of bullish market structure going higher. If it results in me being wrong, so be it. I mean, now I see why I could have been wrong. I mean, this also seems like a nice bit of sell side, but I would consider this maybe even like a low of day, possibly. But anywho, let's mark this 5 minute inversion. Fuck that, that's too much. So my belief is I want to see a bullish change in the state of delivery over here. Then, yeah, Obviously, if it's to continue lower, because also look, if you get a bullish change in the state of delivery, this was this a pussy though, if I remember correctly. Oh, what the fuck was it? Yeah, it was a pussy. So you obviously can see these lows get traded too. I would only take longs into this pre-market high once the 1 minute gives me something convincing. But if it requires it filling the gap that's below the short-term low here, so be it. Who am I to rush? Interesting. Oh, is it crazy? So I mean, like overall, very shitty entry, but it's running alright. I wanted to out of the prop lock, but I was just, you know, just doing some shit. Now, this was an old propulsion block, sorry, an old order block. So judging by the two closes, see, he doesn't quite close there. So now you just have, think of it, if you have two gaps like this, if the market is truly bullish, I don't think I'd want to see it kind of run back to even the lower bit. The most you want to see is a consequent encroachment tab, so like the midpoint of the gap, and it continue higher. I mean, because even on the shorts here, I was saying a low resistance liquidity run, especially in this portion, no fair value gaps are being made at all. You had this big jump up here. I didn't get in there. Should have, but didn't. Because I forget what ICT said. I think still in the 2022 mentorship. Let's say you wanted to trade this change in the state of delivery from here, right? Or say this point within the market runs up here and it's just a bit away from your like former entry point. Just get into the trade, man. So that at some point would have possibly been that one RC everything I was talking about. Like, I'll just leave it. Probably trail the stock to like, no, it's fine, fuck it. It is what it is.
Now we have certainly done these guys like David Robin and Dave Brothers and live in a house. These guys are just telling you like shit. Women don't have anything. They don't have any like motivation speeches or like there's things like advice. These are not certain people. You see the problem. These are crazy. They support that. You know, you're right. That shit is crazy. It's like a man taking in and you don't need to. What are you saying? Really sense. Really powerful. You do. Okay.
Call. Emails call. Okay, still moving up slowly. Swatch this on the 5 until whatever happens, happens, I guess. Because now at least you could argue that you would expect this 5 minute inversion here to hold, but then again, just mark out the 15 SIBI because that should be supporting this run up higher based on this one. See, this SIBI is all the way down here though, so okay. So let's use this one from the 5, and you have one all the way up here as well. So I've got a roadblock there. See how far up it reaches. I can be your hero, baby. I can fight for this forever. So, one of the first notes I made regarding ICT concepts was if you have an Asian, so if you have a previous session which moves a lot, such as if you're trading New York AM and say London moved a shitload, doesn't mean don't go and try and trade it, but don't expect crazy high volume because most likely you're not going to get it, right? So now, all propulsion block here. So you now say draw this out, which is the body. If the market is to continue lower, it will close past the main threshold, probably reject off this quarter level or continue lower. It's higher. If it's to remain bullish, Then obviously it'll keep them up. Ideally, see now, what would be shit in some market conditions is, for fuck's sake, price will now close below this high, trade all the way back down wherever, stop it out, then come take this high. So, because you've taken this high, I'd say I'd wait for the next 5 minute candle to close, then I'd move the stop loss to break even. Yes, this high makes sense. I mean, this could have been a take profit point. No, I want that high. So you see how if I can improve upon my 1 minute entry points, such as adding at this propulsion block here, tighter stop loss, I could have been able to pull a already now say 2.3 or taken my initial risk to reward. Uh, let's wait and see. Give this I see the ship thing here. The market maker models. That's the Porsche I'm talking about. The Porsche, the car you just heard now in the street.
Say what?
The car you just heard now in the street.
Yeah.
There's some fucker who's always